Everybody, this is Jim at sp500chart.com. It is December 5th after the close, 15 after 4, and we're going to use some time-honored techniques to take a look at these modern markets. This is one of our featured daily technical analysis videos of the S&P 500 index. Before we take a look at this really nicely behaving little chart, I would need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. Look, I can draw lines on charts, but you have to draw your own conclusions from your own research. And you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional, just a guy that draws lines on charts. Let's look. And by the way, I want to take this opportunity to remind you that this is not about me telling you what to do. This is about me just pointing out certain things in the chart, letting you decide for yourself whether or not you want to put any of this to work in your own analysis and in your own understanding of the financial markets. So, that said, coming into this week, we had the hint of a breakout above this little symmetrical triangle, which formed after a very small inverse head and shoulders broke out and pulled back. And this whole thing made it look very, very much like we were headed up to the mid-1430s. But then the markets decided to take a little reroute, at which point the GPS, once we hit Tuesday, the GPS says recalculating. And that breakout above this little pattern kind of failed. It did not meet. That's a new word I just made up. It's a combination of meet and reach. It did not meet its implied target that was around 1426. Instead, on Monday, the market sold down and started selling downwards in this little descending kind of a descending wedge pattern. Now, in all fairness, there's some ambiguity to this pattern. For example, you could draw this line right here, at which point it becomes a almost perfectly parallel pattern, but you get more touches if you do it like that. So yesterday, this is where I left that line. And how interesting, we added a new line yesterday. We added this little support line down here that is gray. Let me show you where that comes from. That actually comes, we got two gray support lines. We have this one, which was this area on the 20th, where the market bounded fairly substantially off of that quick sell-off. And the same thing happened there spanning the 27th and 28th. So I decided to just add this line. And if we look at what happened today, we got a bounce right at that line and also right at the back test of this channel, this upper resistance line in this little descending wedge. Now, if you want to get fancy, you could also say, well, that's pretty much also, if you want, a back test of this support line. So we could say potentially we had three little lines here that all kind of converged there, and that's where the S&P experienced a pretty decent bounce, moving from 1398 to 1415 pretty quickly. But this is where it gets also interesting. Remember our little triangle pattern back here. Let's extend a line that kind of runs. Remember how we talk sometimes about there being, if you will, a spine in these patterns that kind of bisects the top and the bottom lines. And I think we kind of have that right here. And that runs from the midway point between the start of the support and resistance lines of this pattern. There we have that. And you can see as we view this, as it runs through this pattern, we get little bounces here and there, and then little moves that seem to pay respect to this line, which just so happens to be also, by definition, right at the apex level of this pattern. Twice today, that apex level presented resistance. That is very typical behavior. Now, this is a small pattern, so that doesn't mean that 1415 is hard resistance. I'm not saying that. But clearly you can see on the first two attacks, the S&P could not get over 1415. Personally, I think it will. But it couldn't do it today. So I just find this very interesting. By the way, if this is a descending wedge, and it acts like a descending wedge, then we need to keep in mind that usually when you get a breakout of these patterns, you get a move at least to re-challenge the high that was in place before that pattern developed. That's just the statistical tendency of these patterns. So that means I would be looking for some more gains this week. That doesn't mean we start out tomorrow and we zoom up, but it means I think we will see some more gains, if not tomorrow, then on Friday. So right now, I just think this is a real cool chart. And once again, we end roughly, very close to where we ended yesterday. The two main lines that I think we still need to watch with a lot of interest is this line down here right around 1391. That needs to hold. If that doesn't hold, then the bears may start to have their way with the market. Here's that line right there. Additionally, we have this line up there. That is a resistance line. If that resistance line at some point breaks and we start to head back up, then I believe that would be a sign that this market wants to head significantly higher. So, guys, I think that's about it for today. Just a neat little day where we saw a back test to near the apex of this descending wedge. Then we saw an immediate bounce, but then we saw resistance right at the apex of this little triangle. So take all of these things into your own analysis. Draw your own charts. Use mine if you want. That's fine. But I'm not going to tell you what to do. I'm not going to tell you to buy here. I'm not going to tell you to sell here. That's none of my business because I don't know what your risk is. And quite frankly, if you're a value investor and you just buy stocks that are good companies that are beat up and you have all kinds of time, you don't even need to be listening to me to start with. You just need to find those companies and do the Peter Lynch thing. So look, guys, thanks for watching the video. It is so good to be back in town and to not have to turn down dinner dates and well, not dates, but dinners with clients, so I can try to get back to the hotel and use a nearly worthless upstream connection to get this done. So look, again, thank you so much for watching. Thank you for your subscription. Take care.